Most entrepreneurs make this one mistake: having all assets in one company. No segregation, no separation, no risk analysis. And why we start this series today called the Corporate Structuring Simplified is because I think in day-to-day life, I meet entrepreneurs, investors moving businesses here to the UAE. They want to do it, but the complexity around it, they just find it so complicated that they don't want to debunk that, or it is the out of the comfort zone. But as I always say, that's not your expertise, and you should always appoint experts for structuring. Now, structuring in terms of your assets, your liabilities, your business, your operating business, and the HoldCo is what we are going to discuss today. My topic today is very simple. It is about what is a holding company in the simplest layman language that I can explain to you, and why your assets should be in the HoldCo and your operating company should be separate, so that we ring fence it. And today I'm going to talk about that. I'm Shireen Kapoor. More about me in the description box, but I'm a corporate lawyer and I'm going to tell you today about this powerful topic and this much aware knowledge that a lot of people need. So in simple language, a holding company, also called a HoldCo, is basically a company which is passive. It is not an active company. What it primarily does is it will have shares in shares of the operating company. It will be a shareholder of your assets. It will hold investments and channelize it as and when needed. But what it will not do is be your point of the contact with your suppliers, be your point of the contact with your labor department, be your point of the contact with day-to-day transactions. So it will be different from an operating company. So what happens technically when such a situation arises is, as you will understand in the coming slides as well, is that if you really want to safeguard your business in terms of because nowadays everybody is diversifying. There is not just one anchor to any business. There are multiple anchors to a business, and what you should be looking at in terms is how to protect the access of creditors to the major assets that you have. And that's why the HoldCo will be separate, and there will be SPVs, prescribed companies, operating companies, depending on your need. And this is one of the major simplest definition of holding company, basically just for holding assets and investments. Also sometimes people do it for intellectual property rights, but that's again another conversation, another video that we will do. Now I want to give you a live example of what a holding company and an operating company would look like. Say for example, there is a developer called Emaar in UAE. Now what Emaar has a HoldCo, which is Emaar Holdings. Okay. Emaar has multiple SPVs for each project. SPV 1, which is the special purpose vehicle, say development 1, development 2, 3, 4, 5. And this way, if there is any kind of problem with Emaar Hospitality, which is the number 1 SPV, nobody can come to the holding company's assets, which is the major asset holder for the family. This is how families protect themselves, protect their assets, and this is what is needed in this globalized world. I also want to tell you one more thing. The smart thing to do here is that if you are also having holding and your structure is not very complex, you just have one business to run and multiple assets that you are using for investment purposes, because a lot of people do that. You should ideally not complicate the structure too much also. Having one HoldCo is enough in terms of holding assets, as long as you have different vehicles to manage other parts of your business. Now, the other features of a holding company, and you would ask me, Shireen, if the shareholders are same of the holding company, say R plus S hold the holding company, which is the HoldCo, and R and S also hold the SPV, can the creditors not come after R and S in the HoldCo? No, because primarily these are LLCs. And by law, every company is treated as a separate legal entity. This is one of the oldest corporate law cases called Solomon versus Solomon, in which this was established, and this is a universal principle of companies law, at least in the advanced economies, and UAE is one such part. Holding company and SPV companies or any other prescribed companies anywhere, depends on the free zone that you're establishing, which is again another discussion, but it will be segregated, and hence nobody can come for the SPV to the HoldCo. That's why how you are protected. Now say for example, ownership of the other companies can be held by the holding company to manage multiple business, for day-to-day management of the businesses. Multiple umbrellas of people who have different kind of industries can all be going to the HoldCo. So it will own shares of those companies. There is no direct operations, which again helps you, which is very important, and the distinction allows you to minimize operational risk. And then of course, all this is done for risk mitigation. If you are a smart business owner, investor, holding properties as well through the HoldCo, is much possible. Besides all the benefits I've spoken about the holding company, there are some key pointers I would like to highlight, and this of course is variable on the free zone or the mainland that we are establishing. This will be dependent on that, but usually and this will be actually dependent on your business actual need, the day-to-day need, but usually risk diversification is one of our key benefits. Then there is tax efficiency opportunities, which is again one of our key benefits, especially in a place like UAE where the economy is dependent on multiple factors. Now they're diversifying. It's not just an oil-based economy, they're diversifying. JP Morgan is opening here, and everybody is seeing the rise in the mid caps, right? So that is why what we understand from this is that the tax benefit in UAE, especially in the free zones, and if say for example you're opening an SPV or a HoldCo in a DIFC, like in the DIFC or ADGM, where the qualifying income also becomes eligible for taking exemption under the corporate tax, which is 100,000 USD on profits, your corporate tax in the UAE. More than, if you have profits more than 100,000 USD, then there is a corporate tax of 9%. Even that exemption is available in the free zones. I mean, that is the kind of safeguarding and the kind of global robust economy UAE is trying to build right now. And it's not just me talking. So many banks opening here, so many fintechs opening here, they all understand. Streamlined decision making, because there is not a lot of glitch in decision making. There is leadership which is very visionary, and hence there is streamlined and easy processes in place, which execution in place of those policies as well. Enhanced capital allocation. When we say enhanced, because you leverage, and that is what you bank on, right? You leverage the capital allocation. Your capital allocation will be much more streamlined and divided properly operationally. If your assets are secured, you understand that in times of need you can use your asset as and when needed. If the business needs it, business. If the personal life needs it, personal. Investment purpose, investment goals, then different. So that is why enhanced capital allocation and legal protection for subsidiaries. And as I said, there could be a parent company and there could be a subsidiary too. Subsidiaries and parent companies are also separate legal entities, and hence we need to be mindful of the parent company, even if that is being owned by a HoldCo. I mean, you can make this structure as complicated as possible, but even if you want to simplify it, I want to add one more benefit, and which is one of the key benefits. There is no public register of this. So there is enhanced legal privacy protection, there is enhanced kind of security of your data, specifically in UAE and specifically with free zones like DIFC, because DIFC in the global standard has a very good reputation. And even if you spend a little more in the initial starting of establishing a company, what you achieve is much more much more regulated. Tomorrow, if you have VCs, if you have startup owners, if you want any kind of funding, if you want banks to give you any kind of funding, they all rely on DIFC and ADGM, which are the two free zones, financial free zones, and especially because they have common law. In conclusion and in summary, I want to tell you one thing, is that when you have these separate legal entities, when you try to mitigate risk, also you need to be careful of the money that you're spending on these structures. It should not be more than what it is worth it. Is it worth it? Yes. 90% of the times the people I deal with, I know it's worth it for them because they have multiple investments and they want to secure it. But also sometimes, I tell you an example, now live example, sometimes people want to segregate their reputation. Okay, they want to segregate the reputation they have built with the brand in a separate entity, and that is why people choose intellectual property rights HoldCo. So what they do is they put their IPR rights in a holding company, and what this will define them is that they will secure their intellectual property rights even if they have an operating company which is under threats from competitors, which has some lawsuits, which has some litigation going on. And this is not just small companies, these are all big companies who will have their IPR protected in some part of the world so that they get royalty that is tax exempted. I mean, it's all about efficiency. How you structure it, it's simply about efficiency of your taxes, about your risk. These two main things is what I see people doing it for. And I also feel in terms of holding companies, what you need to be now after the end of this video, by the end of this video, you need to understand is that there are kind of free zones as well as mainland where you can operate this HoldCo. Why you should opt for one free zone, why you should not opt for another one, this is an altogether a different conversation. But in my next corporate structuring series, I'm gonna tell you what are the key benefits of each of the free zones or mainland where I prefer, and what kind of businesses should be opening there, what kind of trading activity should be in the free zone, what kind of trading activity should be in the mainland. So this is gonna be my next conversation with you on my YouTube channel. Follow me on my other social media handles where I regularly post about legal updates around the globe, specifically UAE, and I also talk about some of the key things that simply layman people need to be wary of in today's globalized world. Thank you for watching today's video. If you like this video, do share this video because we put in a lot of efforts from our professional time to just help you understand these concepts. I think if it really makes a difference, and if you want to reach out to us, the link is in the description box. I regularly conduct webinars on estate planning, wills, corporate structuring here in the UAE. Thank you for watching.